Welcome to Rapid Quants. This is Michael Merle. It's August 19th, 2024, and we're back for another crypto market update. Okay, let's start with the overall picture. It's looking pretty sad the last 6 months. We've been stuck in the sideways range here that's slowly descending, whatever you want to call it, flag or whatever it is. And there's a clear support zone that descends down to around 50,000, 52,000, and on top we're trapped between probably like 68,000 and 52,000. So it's quite a big range, and we've seen quite a lot of volatility. We're in a much more volatile market now than we were over the first 6 months of this year, and also throughout 2023 altogether. 2023 was actually a breeze. I mean, it just worked its way higher here. This might have looked like something significant at the time, but compared with the bear market before, of course, it was nothing, right? And here we are now, and this is really big. Gravitas has had a little bit of issue to kind of cling on here. It's done extremely well over the last few years, and the bear market as well. Here it got shaken out a little bit. It's back short now, and well, I think that we're probably near the end of this range here, so it's gonna pick a direction very, very soon. When you see these accumulation of signals, they might be annoying. But at the same time, they also signal that usually the market gets out of the gate. This is the price of admission. And that's really what you need with a more long-term trading system like that really trades the swings. You really have to focus on staying in the game. And what comes out is something like this, right? If you're looking at Gravitas right now, what it has produced over the last few years is just nothing short of sensational. This is Bitcoin and this is Ethereum right here. It's just doing extremely well. Ethereum actually has held, due to its volatility, it wasn't shaken out as much, right? Especially with this signal here. Bitcoin, a little bit more flat usually. I usually prefer trading Bitcoin with Gravitas, but over the last few weeks, over the last 6 months actually, it's been challenging to hang on. And any system would have been challenging here because it's just too volatile, and we're in a sideways range. So trend systems usually either just stay long, depending on settings, depending on how you want to play it, or they go in and out until they find direction again, and it's back to the races, right? That's how it should be, though. There's nothing really unusual about it. So that's Bitcoin, and Ethereum looks. If you're looking at Ethereum here, yeah, the ranges we're going to talk about in a minute. Again, same thing. It's actually quite a bit weaker than Bitcoin. And if you're looking at Ethereum versus Bitcoin, well, look at this channel down. I mean, it's been trapped in this channel now for the better part of a year, a little bit more. And there seemed to be no escape. I mean, it just keeps working its way down here. It's not looking so great. It's always been very volatile, this cross here. But this is just a really clean trend down. I mean, this is probably a very easy way to just pinch a few pennies just by shorting here and going long here. Basically, well, in a way, right? I mean, you would basically just buy Ethereum here and, buy Bitcoin here versus, or just, go short Ethereum or go short Ethereum Bitcoin if you can. Okay, back to our chart on Bitcoin, because there's actually something else I'm going to show you before we transition into what I want to show you in terms of the weekly ranges here. This is something I hacked up over the weekend. It's Google Trend data versus Bitcoin. And what I did, I just snagged the API from Google and applauded this right here, which is the search result of Bitcoin over the last few years, right? And you can see how people were looking online about Bitcoin. They're looking for Bitcoin, Ethereum, crypto, whatever. This case, it's just Bitcoin. And you can tell when search activity really, really rose very strongly, right? Here, see it in 2021 during the bull market. Of course, then when things got a little bit wild, people were looking for it as well. And then again in 2022 during the big bear market, people were looking at it as well. People were searching online because, a lot of people were concerned. So you see these correlating with usually highs and tops, right? And here again, what I found interesting in the last year or so, though, is that we saw a spike right here near the end of last year. And then it really fell off the plate, so to say. It's really crazy. And it flattened out in January. And then there was a little bit of an activity up, but not as much as you would expect, right? And you can see that we were actually near the 70,000. What's that, 72,000 something we were with Bitcoin. And then it fell down. And since then, interest has completely been sucked out of the market. If you look at this, I'm drawing a straight line here, a horizontal line, where the current interest is. And last time on Sunday, it was around 30. I think it was actually lower because this was probably the week before. I probably should update this today because last time I saw it was around 17 or something like that. It was really, really low. It was really bear market territory, and I'm very surprised about that, especially given the context of the market, given where we are trading right now. With the weekend, we're touching 60,000. We're in and out, right? We're kind of churning our way in the zone right now. But I mean, come on, we were around 16,000 down here, and we're now near 60,000. So that kind of shows, right, how it's not really rational. People are not rational about it. People are emotional about it. And they lose interest. They get bored. They maybe don't read about it in the news. Maybe they lose all hope. Or maybe they just got kind of bored with it or disgusted. Maybe they got shaken out in 2021, decided not to come back. Maybe people lost money in FTX, things like that. But we still have a lot of trading activity going on. I mean, especially with the institutionals really piling into the crypto market, a lot of announcements constantly going on. I'm monitoring announcements actually on partnership alerts and everything like that on a constant basis because I have a feed for that. And yeah, it's just there's so much going on, and it's still a bit of a puzzle to me, honestly, that especially retail is really snoozing this year. Yeah, retail is really sitting this advance out. I feel that when we're hitting maybe 80 to 90, especially 100,000 Bitcoin again, which we will, mark my words, things are going to get really wild because all of a sudden FOMO is going to kick in and everyone's going to want to go back into the market. Okay, so that's just the way I look at it. Now, something else I've been working on. Many of you know me actually as an options trader from the stock world, right? I've been trading a lot of stock options over the years. Gotten actually pretty good at it, very good at it. I've always been profitable the last decade or so trading options, and there's certain ways of looking at the market that I want to kind of bring into crypto. It's just very difficult because concepts like implied volatility, things like that, really to look underneath the market, it's difficult to do with crypto. You can actually get now data for that, but it's not cheap. And it's also still pretty thin. There's not too much market activity happening yet. With perpetual futures, in the crypto market, you get volatility data through the futures, but not really options data yet. As much as I would want to, I don't know if there's a way to potentially come up with a perpetual options contract, but that would kind of defeat the purpose, right? In terms of its nature, in terms of theta burn, all those kind of things. I mean, that's actually one of the aspects that a lot of people trade. Anyway, long story short, one thing I really enjoy always trading, and that I find is very important when I trade personally, right, is the expected move range. And the expected move range is usually calculated based on trading activity, implied volatility, which is volatility as a product of the options market, and which gives you kind of like a one standard deviation range for each week, how far price should advance. That's basically the consensus that you just kind of draw from the options market, but just looking at the value of the options, right? The price of the options, right? Especially at the money options, right? If you take the at the money put and the at the money call, put it together, you genetically stick it together and mutate it together, and out comes the expected move range because you calculate them both together. You're getting a rough range of how much price should move. That makes any sense, right? So let's say an option costs you, I don't know, put costs you $3. The call costs you $3. Simplified. You got a $6 range, right? Up and down. That defines what the market should expect. That's just the way it works. It's actually not that complicated, but I can't really do this yet with most of the coins that I have an eye on, especially the top 100 coins, right? And so what I do, I kind of I came up with a different approach. It's kind of a poor man's approach to doing that, which is, see it right here on the screen. I calculated based on just realized volatility, which is actually, price activity, price volatility, not implied volatility. There's a difference. And I calculate these ranges, and I actually have a script that does it for me. So what I did beforehand, before I record this video, I actually put them all on the chart here. Put in a little bit of legwork because I find it important. So if you believe in this concept, I personally do. I think that where these ranges are, that's where inflection points happen. They look sometimes like, if you extend this out, right here, see that? You cannot see that it crosses through the center of this entire trading range. So it might not be particularly apparent in this example, actually, on Bitcoin, but you'll see on some of the other charts I'm going to show you that it lines up actually quite nicely. Be this as it may, here on the lower side, I think we can agree that this is probably very realistic. If we drop below around 53,000, especially if we drop again below 50,000, it's kind of over, and we're probably going to slide down quite a bit lower. I think we might actually hit like 45,000 or something like that. Very possible. Is it likely? Well, actually, it's probable in this case. Is it likely to happen? Well, for now, what have we looked at? Well, there's always price rejection in this channel, right? You see these big spikes on the bottom, like the wicks, the long wicks. That's what I'm talking about, right? If you're not a price trader, if you're not like a technical trader, that thing right here, that's the wick, right? And that's the body of the candle. And usually when it snaps back like that, right? Since it's the open, this is the close. Well, show me a better example. This is the open, this is the close, right? And the black ones, this is the open, this is the close, and then the wicks are the highs and lows. And you see the lows really, if it snaps back like this so strongly, I kind of identify this as a rejection, and that's what usually should happen around the lower range of a trading zone, of a trading range, of the lower threshold of a trading range, so to say, right? And here it happened very strongly. So this is definitely rejection here, and yeah, we might see a revisit here, but there's a pretty strong argument to be made that it's going to hold here, right? So around 53,000, 52,000. Keep an eye on that. On the upper side, it's more difficult to define, right? The algo tells me it's around 63,000 where things get a little bit wilder, but let's not forget that we have this upper range here as well. So I think our utmost concern right now is, are we going to slide lower? What is the threshold? I'd say around 53,000, right? Somewhere around there. Yeah, I think that's fair to say, right? Same on Ethereum, right here. So I've drawn here as well. It's actually quite clean here. Here looks a little bit easier to correlate with price action, right? The upper range nicely lines up with that, which I always find very good. I see this all the time, by the way. This is not very rare. This happens all the time, where you calculate this based on just volatility. You don't really line it up with any price activity in terms of like charting patterns or anything, but it does actually line up often very nicely. And you see that happening right here, right? You can draw a nice straight line. It lines up very nicely, but this is the upper range, around 2,900 and change. And here below we have 2,300 and change, right? So that's the threshold you need to look out for. I think this is actually going to hold for now. This is quite a lot of support here. I mean, honestly, if Ethereum drops through back through 2,300 and doesn't hold, if it doesn't close, if it closes below, right, that same day or even the next day, we might just go to 1,800 or something. Yeah, that would be bad. I don't think it's going to happen at this point. We have lost quite a bit of price already. There's quite a bit of damage we've already endured here and incurred, and I think this is pretty solid for now. I think this support, let's keep an eye on it though. This is the threshold, okay? I'm going to circle through a few more other charts. So let's look at BNB, of course. I'm just going through the top 10 list. So here we go, 485-ish, here's 576, okay? Lines up again nicely. Just want to point this out. Here as well, it's probably not as clear, but it lines up quite nicely here. Yeah, if we, again, drop through here, it's possible, but it should snap back right away. That's the point. Sometimes what it does, also when it comes to option trading, a lot of times what it does, it drops through, scares the children, so to say, and then it snaps right back within a day or two. If it doesn't, that's usually a bad omen. That's bad medicine, and that's usually when you probably want to get out of a position as soon as you can. Yeah, if you're not already stopped out, of course. All right, next. Well, once we have Solana, let's go there. All right, here we are around 162, and the lower range is around 122. Again, see how this nicely lines up? Again, this is algorithmically, right? So I didn't just draw them based on what I see on the pattern, because if I go And if you look at this right here, and I look for Solana, right? You see right here, 161 and 123. And that's the levels you're going to see right here. Is that Solana? Sorry, I might have been wrong. Yeah, that was 161 and 123. Yes, exactly. Yeah, 123 and 161 right here. Doge, okay. So here, Doge, 0.112 is the threshold. And on the bottom here, we are at 0.08, okay? So yeah, again, this lines up quite nicely here with this support zone. Again, I don't think we're gonna go much lower. I mean, yeah, if it drops below here, even if it drops below, we're probably gonna bottom out around 0.8. I mean, that's just so much support here, right? It's just too much support, too much price action, too much history down there. It's unlikely that it's gonna go much lower from there. Here, it's a little bit less clear on a Cardano. The upper range is around 0.37, right? So if it basically, what does it mean, right? I mean, I should probably explain this better. If it pops above this, there's a good chance it will experience acceleration higher, right? So some people use them as also inflection points to take a buy order, right? And here some people take this as a stop or a sell order if they can, if they're short the market. I look at it as support right here, and we're, yeah, what is it? Yeah, 0.3. Yeah, 0.3. Yeah, ballparking it, right, for Cardano. And what else we got? Yeah, AVAX. Okay, then we're done with our list. All right, so Cardano around 24, and on the bottom side, around 18. Yeah, so that's some easy numbers to remember. It's been slowing down quite a bit. I mean, see volatility has kind of been slowly sucked out of this market. And yeah, I mean, it's given up a lot of territory already here. I think there's some price support, although it's not super strong. So yeah, keep an eye on that. If you're holding this, if it drops below like 18, you might want to just cut your losses and say, it's been a good trade, goodbye. Especially if you've been holding this for longer than just a few weeks, right? Yeah, it's just there's not much going on here right now, and we don't want to see a lot more loss on the downside. This needs to bottom out here, because if it doesn't, right, if it drops to that level, yeah, we might easily go to like 12, 11, something like that, maybe 13, 14. But if it drops to that, yeah, not good. Okay, last but not least, let's go over to some of the sentiments that happened. Sentiment alerts. Alice was a nice mover. So yeah, on the 18th around here, we had an alert. I think it was around 9:30, right? Let me look. I wrote it down here. Yeah, 9:25. On the 18th, we got really nice price movement afterwards. So these sentiment alerts are really, really useful. Then we have another big move was QKC. Never heard of it before. USDT. All right. Quark chain. Quark. It reminds me of DS9. Do you guys remember that show? Deep Space Nine or Star Trek? That what happened on 8/19. Yeah, 8/19 right here, and I think it happened around 2:30ish in the afternoon, and we got a nice. I think it was 14:46. Is it? Oh, okay. I'm on the right day. Oh, this was on the 9th. My bad. I did draw a vertical line, but somehow I lost it. So this was on the 9th. Yeah, right here. Yeah, okay. I thought I drew a vertical line, but I didn't. Shame on me. 14:46. So it happened around here. Yeah, right here. Nice sentiment alert, and yeah, I mean, you could easily squeeze 20-30% out of this, and maybe take profits here when you start seeing some red or black candles on your chart. That's usually the way I play it. Set a stop below, take the trade, and then wait for an advance. And once it starts topping out, once you start seeing some red candles, you just take profits. 20% is not bad, and for these sentiment alerts, it's just. You can't expect like a huge move, right? Like with the listing alerts, it's just not going to happen. All right, what else? One more time, we have SUI, USDT, SUI. And that one happened on the 7th, I think. So it's a little while ago, but we haven't done an update. So let me show you. That one actually really moved, right? I think it happened in the afternoon. So that was the 7th around here, like in the afternoon. And man, that thing really took off. I mean, I probably would have taken profit right here, to be honest. I wouldn't have really held it all the way, but this was a really nice move. It's beautiful. Okay, listing alerts. Listing alerts, Max was awesome. It happened on the 5th of August and it really ramped just massively. It doesn't matter when you got in. Our alert came in a little bit after midnight and you see it starts here on, what is this, OKX, right? Look, whatever exchange you're looking at. Might be different times when it shows up, but you had plenty of time to get in on the small exchanges and just enjoy some of this ride higher. This was just absolutely crazy. It was beautiful. Max was one of the big winners this month. Ebail, USDT is another one I wanted to point out. Let's take a look at KuCoin. Okay. All right. So this one happened on the, that was the 24th of July. So it was last month, late last month. We haven't done an update for a while. I mean, again, same thing. It just really ran massively higher. The alert came in at 6:09 in the morning. And again, plenty of time to get in on the small exchanges. And once it got listed, it just, off to the races. And beautiful. All right, so that's what we got for this week. Again, keep an eye on those thresholds that I shared with you. And I'll see you all next time. Cheers.